What's up guys? This video is going to be on premium and discount, and this concept is very simple and it will help you to really look for what setups you're going to be looking for at the current time in the market. So let's get into it. With this example, we are starting here at 9:30 at market open, and I'm just going to go through all of this New York session in this example. So we're going to start here at 9:30. The first thing I'm going to do to see if we are in discount or premium is this current range that we have. You basically take a fib retracement tool, and you're going to go into the settings on the fib retracement, and these are the settings you're going to want to put. You can change the colors if you want, but you only want 0, 0.5, and 1. You don't use the other ones for this. So we're going to have this here, and you kind of put it in the range that we're in right now. So this is kind of what we're at right now is this. And right now we would be in discount. This upper half is premium and this lower half is discount. Let me actually put this one on. So this green half is premium and this red half is discount. Now the rule for this is when you're in premium, you're going to look to short, and when you are in discount, you are going to long. Now the reasoning for this is, let's say for example, let's say you take a trade like this. This is the idea behind it. And this is right in the middle. And if you're in discount, your risk reward would be better. And same thing for shorts is this. This is the idea behind it. So basically, when you're in discount, you're going to want to look for longs, and when you're in premium, you're going to want to look for shorts. So right now we are in discount, right? So let me put this back. I prefer to use it like this. It's just much easier to see. It's not too many colors at once. So right now we are in discount, which we already know. And if we look for our setups, there's 2 fair value gaps here, so I'm not going to take that. Right, we have some chop, liquidity sweep. So now if I want to see what we're at, I can put this. We are still in discount, so I could be looking for a long here, right? I'm not saying that you'll never get a good short setup while you're in discount, or you'll never get a good long setup while you're in premium. But normally what you're going to want to look for is a long in discount and a short in premium. That's just pretty much how it works. So right now, okay, so now we're back in premium. So if we were to get a good liquidity sweep and an inverse, I would take a setup here. So we have from premium, liquidity sweep, and you could take this fair value gap if you want for a setup. But again, the entry would be in discount. So you can see what we're targeting here would have a bad risk reward, right? If this is the trade. So that's the whole idea behind it. So now taking this setup, you could look and target something from over here if you wanted to. But this is the whole idea behind premium and discount. So I personally wouldn't take this. I don't like how big this stop loss would have to be, because again, that would just mean I would have to target something really far down here to get like a 2 risk reward. That's just so big for a 2 risk reward, and I prefer to keep my trades to around 2 risk reward. I'm never against a higher risk reward, but I just prefer to have around at least a 2 risk reward. So if there's a trade that'll be a 4 risk reward, then I'll still take it, right? It's not like I'm not going to take a higher risk reward. That's more profit. But I prefer to have at least a 2. Sometimes I'll take something with a 1.5 risk reward, but I prefer to have around at least 2. So I wouldn't take this. It's just too much, like too big of a fair value gap for me. And then you can see here we have another sweep of this liquidity up here. So if we use our tool here, we can see that this is, let me put this way. that we are in premium right now, right? And we just took out this high, so we could get a short here, right? And again, I told you I didn't want to take this fair value gap. So let's see if what we get here. So now we're kind of just generating liquidity, right? And we are in premium right now. No setups here, but if we get like, let's say for example, if we were to get a sweep of this and get a setup in discount here, it would be a good long setup, right? So let's see what we get. Still in premium. We get a liquidity sweep here, but no fair value gap here to take it off of. We could check the 30-second. We do have a fair value gap here, but again, one of my rules, this one is way too small. 1.5 points is too small of a fair value gap. So we'll keep playing this forward. Now we have relative equal highs here, and we also have relative equal lows. So let's see. All right, we get a sweep of these relative equal highs, and now we have these relative equal lows. Let's see if we get a setup here. All right, we have a fair value gap. How big is this fair value gap? It's 10 points. Let's see. And we get another sweep of liquidity here. So one thing that you can do with premium and discount is this discount is so far like back. It's at 9:35 and right now we're at 10:08. So what you can do throughout the time is like, okay, so what I'll do is I'll draw a new one for the range that we're at now, right? You could put one here, right? Or something like that. Like you could put it like, even if it's all relative, right? So if I'm trading like something like this, like let's say I'm going a smaller time frame, which I wouldn't from here, but you can use this. It's all relative, right? It depends on the range that you are looking at trading, right? So what I would do is I would draw it out like this to see where we are, and I would say that we are in premium here. And for my setup, we have a liquidity sweep right here and no inverse on this, so I will not be taking this trade right here. So let's see. Price goes up, we get another liquidity sweep here. We have these relative equal lows and liquidity sweep of this as well, which I already drew out. But now for this, what I would do is I would draw out this range, right? Not that. I would draw the range like this, right? I'm not just going to like, we'd be in infinite premium if I just left it here, right? So what I'll do is I'll draw out this. And a lot of figuring out where to put these fib retracement tools is just will come with screen time, and you'll learn like where the current range is and everything. So it's all stuff that you'll get used to doing over time. There's not like an exact rule that I would say I have set for this, for the premium and discount. But here we have this setup. We have a liquidity sweep. It's in premium. So if we get this inverse, the trade could look like this, targeting these relative equal lows. Let's see. We get the inverse. Say we enter in with sells with a TP down here, right? Taking a short in this premium, and let's see what happens. And boom, full TP. Now, again, it's very simple. I don't think there's too much that I really have to explain when it comes to this. It's just when we're in premium, you look for shorts. When we're in discount, you look for longs. And like I said, it should be very simple to understand. I don't really think there's much more that I really have to explain when it comes to this. So that's it for this video. Leave a like if this video helped. Leave a comment if you guys have any suggestions. Make sure you guys join the Discord, and I'll see you guys later.